It made $11 billion a year. It owned a quarter of the entire toy market, and it was killed by a single decision that had nothing to do with toys. This is the rise and ruin of Toys R Us. It started in 1948. A World War II veteran named Charles Lazarus opened a baby furniture store. Parents kept asking for toys, so he gave them toys, and then he gave them a warehouse full of them. He invented the idea of the toy superstore. Aisle after aisle, floor to ceiling, every toy a kid could dream of, all in one place. A giraffe named Geoffrey became the mascot of childhood itself. For decades, Toys R Us was unstoppable. It put every rival out of business. At its peak, it ran around 1,600 stores worldwide, pulled in over $11 billion a year, and controlled as much as a quarter of all toy sales in America. If you grew up in that era, this was the happiest place on earth. But in 2005 came the crack. The company's sales had started to slip, so a group of Wall Street firms, KKR, Bain Capital, and a real estate giant bought Toys R Us in a $6.6 billion leveraged buyout. Here's the trap. In a deal like that, the company itself is forced to borrow the money used to buy it. Overnight, Toys R Us was buried under about $5 billion in debt. And that debt had a price, around $400 million a year just in interest. Think about that. While Amazon and Walmart were pouring money into websites and lower prices, Toys R Us was handing $400 million a year to its lenders. It had nothing left to modernize, nothing left to fight back with. It hadn't turned an annual profit since 2013. The stores grew old, the website fell behind, the giant was still standing, but it was bleeding out. Then came one bad Christmas. In late 2017, holiday sales came in at barely half of a normal year. Nervous suppliers demanded cash up front, empty shelves, a death spiral. In September 2017, Toys R Us filed for bankruptcy, and on June 29, 2018, after 70 years, the last store closed its doors. 33,000 people lost their jobs. Here's the lesson. Toys R Us didn't forget how to sell toys. It was profitable, it was iconic, it was loved. It was killed by a balance sheet. Debt doesn't care about nostalgia. When you owe more than you can earn, time always runs out. The empire that raised a generation was gone. Not because of the toys, because of the math.